Hey folks, this episode is sponsored by City Traders Imperium. Now, what you might not know is CTI has the best funded account conditions up to $2 million, which is the most in the industry. Now, go check out the video I recorded with them to learn more about their incredible package where Trading Nut listeners get an exclusive deal. It includes access to their high-performance trader mastermind and funding program. What are you waiting for? Click the link in the description below or above and go check out that video. All right, folks, welcome back to the Trading Nut YouTube channel. We've got James Ford with us back in the house after almost a year. James, how are things over there in the UK?
Pretty good. Obviously, we've had lockdown like every majority of people in the world. Not so much of yourself. You're all right over there. Things are good. Trading's great. I hope everyone else is doing good as well.
Well, cool. Look, we've got you back on the show here for good reason as well. So James is going to walk us through step-by-step how to work with corrective moves and impulse moves and that sort of thing. We're going to break that down and you're going to see how he actually enters trades based on that with a little bit of extra stuff in there as well. So I've had a quick sneak peek at it and it looks amazing. Guys, you guys are probably going to want to watch this a few times. I mean, I know you spent, 10,000 plus hours at the charts, so...
Too many.
Yeah.
Too many. And they only keep growing.
Cool. Well, look, let's jump into your screen and have a look at things.
Okay, thanks, Cam. Really appreciate the intro. And yes, it has been a whole year since the last YouTube video on Trading Nut. I had great feedback. Many people came to my channel from it as well. And when they reached out to me, told me that they absolutely love Cam's channel. So do really appreciate you guys tuning in always for some education. Now, a year ago, we ran through the basic principles of market structure here on the Trading Nut channel, where we was just taking a note of lower highs, lower lows, higher highs, higher lows, testing each other. However, you can always go into more detail in the market flow. So, of course, we've got the market structure, but the market structure is formed by market flow, and the market flow will really help you identify the next direction that price is looking to take. So, we've got 4 corrective moves that we look for here at Technical Effects. We've got the impulse down, we have the correction up, and then we have the impulse down. This is clearly in a downtrend that we're looking for this, and we would be looking to take sales after the corrective move. A impulse is what gives you intent of direction. It is the intended direction that price is looking to go. A correction is not showing you that. A correction is showing you that price isn't intended to go in that direction. So when we have the impulse down, that's the intended direction. We see the correction. We then see the intent again to the downside with an impulse. But we can also have an impulse down, a descending correction, which shows us no intent to the downside anymore, which we then look for break structure, test the structure, impulse up. So you've got the move there where you've got a descending correction as well. We also have the opposite to this, which is uptrend, impulse, descending correction, then an impulse. And we then also have an impulse, ascending correction, and impulse. We look to take sells up here. We look to take buys down here. And these are the 4 corrective moves that I look at all the time. Now, if I see the market show an impulse, I get this question all the time. What do I do? Well, it's not really a setup that I'm looking for because we've got intent and intent. So we walk away. That is just the way that it is. The market will not always be readable. If we see intent, what are we waiting for? Well, we're waiting for the market to either show us descending correction for upside, or we may see ascending correction for downside. We just have to wait. And it is the same if we see the market show a correction and then turns into another correction. Well, this isn't what I look for, so I'm going to have to be patient. And that's more so a bit of a range in market. So these are the 4 moves that we're really looking for here at Technical Effects because it shows us the corrective moves, shows us the non-intent. So it allows us to see where price is more than likely going to head to next. Now, as Cam said, just to quickly give you guys an insight into a trade that I've taken on the back of this exact move that I'm talking about. This is a trade that I took and closed out this morning in AUD NZD. Okay. Now, there's some concepts inspired in this by ICT. Now, if we take a look here, what we will see is that price is pushing to the downside, but I just quickly want to take you back into the blank chart of this because I always break everything down from the higher time frame. So we're going to start off here on the daily time frame where we're going to break it down as to why I was looking for a buy. So here on the daily time frame, going back into the structure of this market, we had the low down here. We had a high right here. This high broke through this structures right here. Very, very important. We broke through structures with an impulsive move to the upside. Back to the downside, higher low. Push to the upside, potential double top. Price failed to break the low, forming a higher low. Price pushed to the upside, forming a higher high. Therefore, daily time frame, we've got a higher low and we've got a higher high. So therefore, at any point before this higher low right here, okay, before this one right here, we could form a higher low in any of these areas on the daily time frame and push back off to the upside. Because we know that that is the overall trend there on the daily time frame, I'm comfortable taking buys, even though when we drop into the 4H and the 1H, we are counter trend trading. But I am going with the overall trend on the bigger picture, which is how I always break the markets down. So we saw price come into 1.07500. That's a psychological level, round number, half number. A lot of people have spoke about that on Cam's channel, so you guys should know exactly what that is. Price came down in. How did price come down into this area? Well, remember those 4 corrective moves? We saw an impulse down right here. We then saw price take the descending correction to the downside. What did that tell me? It told me that there was no real intent to take price to the downside. Therefore, we then saw price create these equal lows, equal highs is a fake area of support or resistance on the lower time frames, trapping traders. So we know there's going to be some potential stop losses below there. So we allow the banks and the market to do what it needs to do. So we saw price spike them out just here. Price took them out. We then saw price start to push to the upside. I actually took this on the 1 hour time frame. I don't trade the 30-minute. I only drop into the 30-minute to see price a bit clearer. If price isn't clear on the 4 hour, drop to the 2, drop to the 1. But it doesn't mean you have to trade it. It's just because you're trying to see something a bit clearer. So don't feel that you can't do that. It's not your trading time frame, but you're just seeing something a little bit clearer. So right now, you guys will hopefully be able to see that that is a corrective move, although it was clearer on the 30 minutes, as you can see right there. It's a bit clearer, but again, it's not as clear on the 4H, which is why using multiple time frames is key.
Hey guys, quick message from my sponsor Sage Capital. Now they provide education software and tools needed to increase anyone's ability to trade more successfully. Perfect for people who are either still learning, too busy, or just want to use professional grade strategies to build passive income. They've achieved high returns with relatively low risk and are available for auto copying today. Go to sagecapital.co.uk or click the link above and start auto trading today.
Down here, after seeing these equal lows taken out, I saw a 1, 2, 3 pattern. For you guys that are from Technical Effects' YouTube channel, you will know that I like the morning and evening stars. I always find 3 candlesticks in a pattern is better than 1, is better than 2, because there's 3. So always prefer to go with 3. That or a bullish engulfing, a momentum bullish engulfing is rather nice. So what I actually do with my entries is I actually set my orders at 50% of the signal candle, because we tend to always get that wick come to the downside. If we don't, I don't get in. But this was a 1 to 4.3 risk to reward. If I drag this up to the entry, can you see how that now becomes a 1 to 3.29? Just by that little bit right there. So I actually gain 1% by doing my orders at 50% of the entry candle. But we tend to normally see a wick down, filling 50% of the entry candle. But sometimes you won't, and you will miss orders. It's part and parcel. You either take live entries every time and you take off that little bit of percentage, or you take orders every time and you add on that percentage, but you've got the chance of missing some. So overall, they balance out. I prefer to do the orders. That's just what I prefer to stick to. And a lot of the community do here at Technical Effects too. So again, this is literally, we've had the impulse down, we've had the corrective move into an area of support, we had the equal lows, we then saw the price action. That there is the risk entry. Okay, that's the risk entry, taking it right there. You can wait for price to push up, break through structures, come back, test, and then continue off if you want a confirmation entry. So 2 entries that we do look for here at Technical Effects. That there, as Cam said, that's a trade that I took exactly with these moves. I can quickly run over just a couple more before we go into the other charts. Here you'll see the exact same thing. Some of the community caught this one. We had a impulse down, descending correction, again taking out those equal lows, and then we push off to the upside. We can take a look at another example. Even GB pound USD was a lovely short position that the community took. Here we had the impulse up. Again, you will need to train your eyes, but you then see the correction to the upside. You then see that bearish engulfing there showing the momentum. And then if you set your order at 50%, the wick would have took you in again. Okay, so there is the impulse up. Then we have the ascending correction. Then we have to move down. One last one that we'll take a look at, which I believe is GA. Yep, again, my community took this yesterday. I personally was trading AUD, NZD. You can't take them all. But again, this is the same thing. It's a counter trend trade because the market here is clearly forming higher lows. So it is a counter trend trade, but price came into 1.80800 resistance point. Again, equal highs just through here, spike of them, and then we got the downside move. A lot of my students did actually take the trade on the back of the momentum breakout candle here, and then setting an order at 50%, took them into the trade for the short to the downside on the back of this. I'm not going to sit here and claim I took a trade that I didn't take, but this is the trade that they took. So they took maybe a 2.4%, minimum 2% off of this, if he was just trading it into the lows there. So as you can see, they are the corrective moves in action. And if we just go through a blank chart, we can go through any chart really. This is AUD NZD. Let's take a look at, let's go with GB pound AUD. So remember those 4 corrective moves. Actually, we're going to go with Euro NZD because it enables me to show you the bigger picture examples. Okay. So remember the fact that impulse corrections, this happens on every single time frame. Okay. And guys, if some of you are watching this thinking, I already know this, that's great, because this is the basics of price flow. And if you know this and are not profitable, go back to this. The basics are always the most important part, okay? And this is price flow, which is showing you intent of direction and non-intent of direction, okay? So you're more than likely going to be on the right side of the market more. So if we just take a look here and we break down this from the daily time frame, we're really going to see the same thing. We know we're in a downtrend. So over here, just to quickly break it down. And for you guys that say, yeah, but you're going over previous price. Well, if you want to sit here for the next 3 weeks with me and take a look at how price flows, we can do that. But this is what you have to do in the tutorial. I always get those comments. You're going over previous history. Well, I can't print the future. So it's just one of those. But yeah, so here we had the impulse move down. We then get the corrective move up. Okay, so again here, you end up with the corrective move up. Some people say channels, wedges, whatever it is, you're correct. It could be a channel, it could be a wedge. I don't really care. I'm more so focused on price flow. Okay, so here we have the impulse down, the correction, another impulse down. On the lower time frames, this would have been a descending correction. Now, how do I know that? Well, we sat here for 4, 8, 12, 16 hours, 16 hours there to the downside. Very slowly, it's going to be a descending correction where we then push out to the upside. Then after that, we then see price take the correction here again before then seeing the continuation. And then there is always going to be these corrections on the way. And these are just lower time frames corrections. And then what happens is we go into the lower time frames. We go into the 4H. Let's just reset this and zoom out. Okay, so what do we see happen here? Well, previously, we were seeing ascending corrections showing us intent to the downside. Right here, we see huge, big impulse in this move right here. Okay, large impulse. That wasn't great, but so that there is a super large impulse that actually broke through some structures. Right here, broke through this lower high point, we dipped down. That's an impulse. After that, we don't really do much, okay? We need to be patient. What happens after that? We actually get a large correction right here. But in this large correction, if we go into the 1H and we just go across, you will see that we see the same thing happening. So there's always potential trading opportunities in the market when you're flowing like this, but we'll see the same thing. So here we end up with a bit of an impulse, but then we get an impulse correction. Then we descending correct before the upside push here. Then we move down in a bit of a corrective form here before we then get the ascending corrective move before the impulse down, descending corrective move before the impulse up. So the market is flowing like this all the time. You can even see it right here. If we take a look at this impulse move right here, we then get what? Descending correction. After the descending correction, we push to the upside, breakthrough structures, then we correct to the downside, we push off. So if we correcting to the downside, we're more than likely going to push to the upside. And if we're ascending to the upside, we're more than likely going to push to the downside. Okay, so just quickly to remove all of this, actually, we'll just click delete and we'll go back into the 4H. Okay, because it doesn't matter what time frames you trade. This happens on every time frame. You just need to be aware of, if you're going lower and lower, that your targets get smaller and smaller. That's the only thing you've got to be aware of when you're dropping down the time frames. Don't really think that you're going to be going into the 5-minute time frame, catching a daily time frame move. Okay, but this happens on every time frame. I also have a video on my channel about that, going through all the time frames, showing you that it's on the weekly, daily, 4-hour, 1 hour, 15-minute, 5-minute. You'll see the same things. So right here, we see the same thing here where we have the impulse up. What did that impulse do? breakthrough structures. After that, we get the corrective move to the downside. We then get an impulse up. We then ascendingly correct to the upside before an impulse down. And this is the flow of the market all the time. So just remember, there is 4 corrective moves that you really want to focus on: the impulse, the correction down, and then the move up. And then the impulse down, the corrective move up and move down. And then we have the move down, descending correction, move up. And then we have the impulse up, ascending correction, and then down. Now, when you're looking for an entry here, okay, say this is the 4-hour time frame or the 1-hour time frame where you're seeing the corrective move. Now, we look for what we call the structure shift. So technically, in this corrective move right here, we are seeing the market form lower lows, lower highs like this, okay, because that's the corrective. Then we look for breaker structure, which then we look for a test causing a higher low. We look for this little move to the downside to again be corrective to look for our buys. And that is basically how you look for a confirmed entry. Here is the risk entry, which we look for more reasons to take the trade. If we're going to take a risk entry, you need a lot more reasons, which is equal lows, equal highs being taken out. Okay, because it shows you more reasoning for that move to happen. And this price flow, as I said, happens on every time frame. I just showed you it happening in trades that I've taken. I showed you it happening in other example trades that people look to take. But the way price flows, if you just take a look here, this here price slows down, we start to move corrective. It's showing possible downside movement. Yeah, we don't go all the way into the lows because we're in a bullish market. But this gives you a heads up that we're looking at the possibility of that downside move. Okay? Don't think that every correction as well is always going to play out. You're getting the wrong idea of the stick. Okay? Nothing in the markets is always going to play out. But just remember, an impulse shows you intent of direction. A correction shows you non-intent of direction. If you start to see the market like this, yes, this is the 4-hour time frame, and you can trade all these small pullbacks on the 1 hour, the 15-minute, whatever you want to do. Okay? But just remember that the overall direction is to the upside, because that's what we got the impulse in. And we could even go into Euro USD right now and AUD USD. We can go into the daily time frame and we can zoom out, and we will see these exact same moves happening here on the daily time frame. We can then go into the weekly time frame, but here you see an impulse, you then see the correction, you see the impulse. What do we then see? We then see an ascending correction showing us possible downside, but we're in a bullish market, so we're only looking for short-term downside. We get the move down, we then correct up, and we come back down, we form a double bottom, we then break above. Technically, if we zoomed in and went into the lower time frame, this here would be a bit of a correction. You guys can see that you've got pretty much 3 indecision candles there. That's 3 days of indecision. Okay, that's slow movement to the downside, showing you the corrective move. You then get the move up. What do we then start to see? A ascending correction, showing us the possibility of downside movement. Then we get the downside movement. We then get the corrective move again, impulse down, corrective move, impulse down, impulse up, breaking structures. So evidently, what would I be looking for now? Well, I'll be looking for lower time frame correction for buys. And that is pretty much exactly what I am really looking for in Euro USD at the minute. Just looking for price to really get above this region to look for possible buys to the upside. So again, just breaking it down, you guys can evidently, if you go back over the markets and you just take a look at what happens after an impulse and what happens after a correction, this should all fit together very, very well. But just remember, break it down from the weekly, daily, 4-hour into your entry time frame, because you need to know if the weekly's corrective or the weekly's impulsive, if the daily's impulsive or the daily's corrective, and the 4-hour, you need to know the same on each time frame so you know what phase each market is in. So guys, really hope that you enjoyed this video. Let us know in the comments. I'm just sharing knowledge, which I do every single day, which I know works for my community. If it works for you, amazing. If it doesn't, it may just not be the style. But yeah, Cam, I appreciate you having me back on your show.
Yeah, that was awesome. That was really, really good, guys. This is probably it's a masterclass in learning about corrective and impulsive moves. If you do resonate with that, even if you don't, I'd go back and have a look at it probably 3 times, because there's a lot of knowledge in there. And James, really appreciate you sharing with us. And do remember, guys, we did a video on market structure as well a year ago, so you probably want to check that out. I'll put a link underneath this video or at the end of it to that video so you can get the full picture here.
And what they want to do they want to combine that together. So when you see a breaker structure with an impulse, look for the correction back into structure for the test, and voila.
Brilliant. Well, look, James, how can the guys find out more about you?
YouTube, Technical Effects, Instagram, Technical Effects, our website, technicaleffects.co.uk, and that is pretty much it. You can contact me on any of those.
Awesome. Well, look, thank you very much for coming on the show once again. Guys, do remember to hit subscribe, hit like on this video, and if you want to see more videos like this, do click the little button with the bell and click all, and we'll see you in the next one.